Hello, everyone, and welcome back to Real Take Real Estate with the Joseph team. I'm your host, Maddie Maloney, and I'm joined here by my co-hosts today again,
Joe Sambear
and Sam Feta.
So welcome, everyone. Today, we are going to go into kind of part two of our first-time homebuyer segment and really diving into what is needed when you're looking to get those funds for the down payment, what everything at cash needed for closing, and kind of where all that needs to come from and what you can expect will be needed to document that. So starting off with Joe, what is something that is a misconception maybe with down payment?
Misconception with down payment, we've talked about a little bit in the past about you need 20%.
Yep.
And usually with a first-time homebuyer, you don't.
Mm-hmm.
So step one is, how much do we really need?
Mm-hmm.
And it's not just down payment, it's closing costs, it's prepaids. We'll get into that maybe later, but there's a couple core things that we know for sure you're going to need down payment. We know for sure you're going to need some escrow, prepaids for your homeowner's insurance and taxes, starting that, we call it quote unquote savings account attached to your mortgage.
Exactly.
And closing costs. So third party costs, our costs, anything involved with bringing you to the closing table is a cost that's going to be documented and it's going to be shown in your final closing disclosure. So step one would be when we're getting pre-qualified, we're going to look at a scenario and we're going to, even if it's an example property, we're going to come to a conclusion of this is how much cash is needed. So then we can determine, do you have those funds accessible? And do you have the right documentation for that?
Yeah, that's always a big question up front is where are those funds going to be coming from for down payment? Is it mattress money? Is it okay if I just put 10 grand
we have
into my account?
If you're looking to buy a home and you have your savings under your mattress, please get it into a bank account.
For so many reasons.
So many reasons.
Not just because of the mortgage.
Please put it into a bank, because say they do have mattress funds, how long do they need to have it in the bank account for us to be able to use that?
Yeah.
Well, the definition of seasoning usually is at least a 2-month cycle, a 60-day cycle of full bank statements showing all the deposits, withdrawals, etc. And that would be seasoned money. It has to be over 2 months.
And that's a big question we get all the time too is, why are you asking me for so many bank statements throughout the process? And that's because we have underwriting guidelines that we have to follow, because we need to know basically where every dollar for closing is coming from. That's regulated by, our investors that underwrite the mortgages and want to make sure it lines up with those guidelines. We need to document exactly where those funds are coming from.
To see if you have the stability for that loan program, one. And the other key thing is we're not nosy. We really don't want to know exactly where every dollar is coming from, but we do need to know if there's another liability that we were not aware of that we're not factoring into the equation.
Yeah, because
that's the main reason is we want to know is there a liability attached to this dollar? Is this owed back to someone?
Yeah.
Is it from something you're going to pay interest on? So we need
and
to
that can blow up a deal that we've seen too is, if you have a random $3,000 deposit but right before closing, where did those funds come from? Did you take out a new loan and now you don't qualify for that mortgage anymore? So really that's one thing you really want to be transparent about. I know it can seem like a lot as a buyer, that we are being nosy, like you said, Joe, but it's really making sure that everything stays together and closes smoothly.
And we want that information because usually there is a way to get to the end result. So maybe that $3,000 was a gift from a parent.
Yeah,
that's okay.
And that's fine.
Most loan programs, that's
absolutely
acceptable. So just let us know and be transparent about, okay, this is what I have so far. Even if it's not enough, we can work through it. You can even, we've had customers who actually, I think that's one of the stumbling blocks sometimes is like, well, I don't have all my down payment money saved yet. But you can actually save. I mean, it is possible to save it through just your normal pay,
acceptable sources
through the pre-qualification process. It's okay.
It's fine if
so you don't have to have
now.
every penny, but we just have to have a good plan and a good discussion about it.
So we know mattress money is unacceptable. What is acceptable funds that are able to be used? So we know that, standard checking and savings, whatever you save from your W-2, are there any other funds that can be used to go towards the closing costs and down payment?
Yeah, we do have some homeowners, first-time homebuyers in particular, that would get a gift and it has to be from an acceptable person.
Yeah, like
usually
a relative. Yeah,
relative, documented significant other. So yeah, there's a limited group of people that can get.
It cannot come from a friend.
No, not just your buddy down the
even
street.
a good friend.
Even the best of friends.
Yeah, exactly.
Cannot come from them.
Yeah, and sometimes too, if you're not, if it's a couple and they're engaged but not married yet, we've made circumstances where it is acceptable if we have proof that they're actually engaged
Documentation.
to be married.
Yep.
Documentation. It's all really just revolves around documenting the acceptable source.
Other acceptable sources would be if I have a nice 401k retirement plan and I need to dip into that just a little bit. Sometimes that's not advisable. That's a good question for your financial advisor. But sometimes just to make that little difference, it's enough to get them over the edge. So withdrawal from an acceptable withdrawal from a retirement investments is acceptable source. Stocks, mutual funds, bonds, those are all acceptable sources as long as you're the primary owner of that account.
Yeah, great. So say I'm a first-time home buyer. I realize I don't have exactly enough funds for my dream home. I don't have the best of family that would give me any gifts. Do I have any options then to obtain any more funds to get me to what I need to get to closing?
A couple things come to mind quickly. Down payment assistance programs, some of the grants, the Housing Coalition, if your state has a housing authority, there's federal money, state money, local money available for grants. Those are usually acceptable funds given the loan program. There also is something called seller concessions, where it's actually part of your purchase contract with Maddie, I'm buying your house. You're listing it for X dollar amount. I'm going to offer X. And part of that is negotiated closing costs. You're going to pay a certain percentage of my closing costs, not your cost, but the buyer's cost. That is an allowable, it's probably underutilized in some situations scenario where that can help. You can actually finance in some of the closing costs. It could be negotiated into the contract. There are several limitations with that based on the loan product and program, but that's another way to get to the final result.
Which we really haven't seen seller concessions when it was a super hot market, just because, there was so many offers over asking, cash offers coming in. Sellers really weren't looking at accepting any seller concessions. But with the latest turn in the housing market, I would say we are seeing some seller concessions now, which is great. Great for those first-time homebuyers really wanting to get their closing costs covered, lower that funds needed for closing. But if you have any questions about seller concession or is this an option for me, that really comes into play where you need a great realtor and lender on your side that are working together, communicating to make sure, okay, yes, we can do seller concessions on this. This is what you can offer. Talking with your realtor, is this going to be even an option for this home? What does that look like? That's where it comes into play, that having a trusted advisor so that we know to offer, like, hey, you know what, maybe this is an option for this, or, we won't be able to offer seller concessions on this, but then you get with your lender and be like, okay, well, let's look at these down payment assistance options. And it does vary from area to area, but that's what we're here for, because we know the options available and we'll still help you. If that's the biggest hurdle, I would say don't let that stop you from going out and, just seeing if there's any other options, because, there's options available.
And working with that realtor partner to explain to the seller what's going on. So the seller understands how much am I getting, or they can explain to the seller's realtor properly. That makes all the difference.
Yeah, exactly. It's kind of just negotiating the price and basically asking the seller to pay a portion of your closing costs as a seller concession. So that's really, if the house is listed at $100,000, they offer $103,000 with basically a $3,000 kickback from the seller. That can lower the overall cash needed at closing by $3,000.
And can be a win-win for all of them.
Yeah, exactly.
Yeah, definitely. So say that I am using gift from my family to be able to get my funds for closing. I think as a first-time home buyer, there may be some confusion. So if I'm getting a gift fund, do my parents then have to be on the mortgage in order to receive a gift?
No, they don't. And a gift isn't a loan. So always want to clarify, we're talking about a real gift that's not repayable.
Exactly.
That doesn't have interest bearing between your parent and yourself. There can't be a note on the side. It has to be a real gift. And no, that's the one the thing that is definitely a misconception is, oh, now I'm bringing this other party involved. We need to see their assets. We need to see their social security number. They need to be tied in. They're permanently tied into that.
No,
and that obviously concerns a parent, and that's
yeah. And we have them fill out the gift letter form. It's basically pretty simple. They'll fill out a form just stating there's no repayment obligated on this. It's a true gift, and then just need a copy of the check or transfer that the donor gives to the buyer, and it's a pretty simple process there.
And a lot of transactions, we actually have the gift letter signed, executed appropriately, given to us. The game plan's laid out. And parents like this, they'll bring the gift actually to closing. It's actually a cashier's check given to the title company, made out to the title company. Remittances,
exactly
the child or when receiving the gift. So,
I think another question that also comes up when parents or relatives and the buyer are talking about that gift. We often get asked, the tax implications of, how much can you gift? And, what would you say when someone asks you about the tax implications? What is your best advice there?
Talk to a tax advisor.
Exactly.
That's the best response.
Because being a CPA myself, I know enough to know that gift tax is a more complex topic. It's not just the IRS says this is the allowable gift. It's quite more complex. And it really depends on your tax implication, your personal tax implications of record keeping, how much gift of your life, and it gets very complex.
Yeah,
so it's definitely talk to your tax advisor to get that counsel
100%.
Because it might not be what you think it is. And sometimes multiple gifts are allowed. One parent can give, a spouse this much and the other spouse that much. So there's quite a bit of rules and regulations in regards to that.
Yeah. Definitely. Well, I think hopefully we have really cleared up what all is needed when looking at that down payment, the funds for closing. So basically, please don't have that mattress money. If you do, put it in a bank account.
Or any other qualified financial institution.
Yeah, exactly.
Can't get a gift from a friend. Make sure, whatever funds you are using, we can document that. We can get those bank statements or we can see where those funds are coming from. Gifts are allowable. If your parents have any questions, your relatives have any questions about how much to gift, you can always first ask us, see if we have any great advice on that. But if it's something like the tax implications, we are going to, recommend that you get with your advisor, a good tax advisor there. But hopefully that cleared up a little bit of some misconceptions for down payment funds. Of course, if you guys have any other questions on that, don't hesitate to reach out to us. But until then, we will see everyone at the next episode. Thank you so much.
Thank you
so much.